Yo, what's up, crypto community? It's your man, Mr. X to the O to the L to the U to the Sean, Mr. Solution. So on today's episode, we'll be looking at the concept of golden cross, right? We'll be explaining what golden cross means. Alright, but before we dive into that, if you have any question you want to ask about cryptocurrency trading, anything about cryptocurrency, you can always reach me through any of my social media channels, my WhatsApp, my Twitter, my Instagram, and also Telegram. I'll be leaving the link at the description section of the video. And also, if you are looking for a community of traders where you can join to get daily insight, analysis on Bitcoin and other cryptocurrencies, I invite you to join my Telegram channel. I'll also be leaving the link at the description section of the video. Alright, so let's dive into the meat of the matter of what we have today. Like I said, we'll be looking at the concept of golden cross. So what is golden cross? Simply put, golden cross is what happens when the 50-day exponential moving average goes above the 200 moving average, right? So whenever you look at the 50-day moving average and you see it going above the 200-day moving average, that is golden cross. We also have, we call the death cross, but we'll be looking at that one in the subsequent editions, or the edition of our video. We'll be looking at it subsequently, right? But like I said, golden cross is the opposite of death cross, and death cross is the opposite of golden cross. Golden cross occurs when the 50-day exponential moving average goes above the 200-day moving average, and then death cross occurs when the 50-day moving average goes below the 200-day moving average. All right, so that's just the simplest definition of that. And let's look at the pictorial representation of what I just talked about now. We're looking at okay, this is, I'm using trading view, right? So this is the trading view. You can see that. Follow my mouse, please. Here, this is the 50 exponential moving day average. That's the 50-day moving average. Then we have the 200, right? So what it means is that why the golden color represent the 50-day, this blue, actually this sky blue, represents what represents the 200-day moving average. So you can see it here. This is BTC chart. This is BTC perpetual. I'm using this chart, this data is from FTS exchange, and of course FTS is my number one exchange. That's the exchange I've been using for a very long time. And if you're looking for the exchange that cares about you, the exchange that is interested in your profitability, I also invite you to sign up with FTS exchange. The link to sign up is also at the description section of this video, right? And if you have any question, maybe you want to navigate your way through the FTS exchange, I have done several videos about that. But if there's still anything that is confusing, you can also reach out to me, bordering on FTS exchange, and then you'll be receiving enough explanation as much as you want. All right, so like I said, this golden one is the 50-day moving average, while this blue one represents what the 200-day moving average. Okay, so immediately it went above it. Okay, look at it here at this point. Okay, let's just ignore this, what happened this past time. All right, so we are using the daily chart. This is BTC perpetuals daily chart, right? So you can see it here. Immediately this 50-day moving, look at where it started from. Immediately this 50-day moving average went above the 200-day moving average. That was when we started witnessing what they call the golden cross. Right, immediately this 50-day moving average went above the 200-day moving average. That was when we started experiencing the golden cross, and you can see what has been happening there since that time. Immediately it went above it, price has actually been going up, and all this while it's still up. It's still above the 200 moving average. That's why the price is still up, even though, yeah, the market is currently precarious. Everybody is actually sitting on their hands. Everybody's askance, right? Everybody's expecting anything at any point in time. But as long as this 50-day moving average hasn't gone below this 200-day moving average, there's really nothing to worry about. You can say that all is fine. We can say that all is well because it hasn't crossed it. But in a situation whereby this 200-day moving average goes above 50-day moving average, then that is when we now know that story has changed. But right now market is still bullish. So the main thing for you to understand is that whenever the 250-day moving average goes above the 200-day moving average, just know that the market is bullish. We just start expecting bullishness. All right, so this is just the pictorial representation of what I meant when I said golden cross occurs when the 50-day moving average goes above the 200-day moving average. All right, so let's go back to our slide. Right, so we've explained what golden cross means. So the question arises, how do you trade with the golden cross? Like, how do you know what to do with the golden cross? There is something you shouldn't do. Here I said how not to trade the golden cross. Whenever you witness a choppy market, whenever a market is in a range, whenever a market is ranging, you have no business trading the golden cross, because before you know it, you get whipsawed out of the market. So whenever a market is in a range, don't trade the golden cross. Just allow it until market settles. All right. So don't trade the golden cross whenever the market is in a range, because what many persons do is that whenever they witness this golden cross occurring, they go right ahead and long the market. But before you long the market, ask yourself, what kind of market is this? Is this a ranging market? Is this market ranging, right? Is it going up? Is it coming? Is it just ranging? If it's a ranging market, you have no business trading it, because a ranging market. Let me show us a diagrammatical representation of what I mean by a ranging market, a range bound market, right? Currently now, this is an example of what I mean by a range, right? So let's just say this is the support, this is resistance. So when it starts seeing something like this, it goes up, start coming down, something like this, right? This is a range bound market, right? So you don't need to trade it, because intermittently, if a market is in a range, if a market is ranging intermittently, you'll be seeing the golden cross going, you will be seeing the 50 EMA going below the 200 EMA, and also see the 50 EMA go above the 200 EMA. So you don't trade the golden cross whenever a market is in a range. So one of the things to avoid is that whenever a market is in a range, don't trade the golden cross. All right. So that's point number one. Let me erase this. All right. So that's one thing you need to know. You don't trade the golden cross when a market is in a range. So then it now brings us the question, how do you now trade the golden cross? How do you use the golden cross, right? So here I was able to put up some points that can help you to know how to trade the golden cross. And one of the points is that golden cross helps you to filter the trend. It helps you to know the current trend of the market. It serves as a trend filter, right? Remember, we basically have three types of trend. We have the uptrend, we have the downtrend, and then we have the range bound market. These three things are the types of trends we have in the market. And remember what I said initially, you do not trade the golden cross when a market is in a range. When a market is range bound, you don't trade the golden cross, so that you don't get whipsawed, you don't get chopped out of the market and all that. So you use the golden cross to ascertain the current trend of the market. What do I mean by that? Just like what I shared with us initially, whenever you see the 50 EMA going above, look at it here, whenever you see the 50 EMA, that's 50-day moving average, going above the 200-day moving average, just know that the trend has changed. For instance, just look at what happened here. I'm trying to backdate this chart so that we can get as much data as possible. All right, so look at what happened here. Look at it here. All right, okay, let's just start from here, right? So at this point, 200-day moving average went above the 50-day moving average, and immediately across, the market started going down, market started dropping, right? Market. So it helps you to know the trend of the market. So if I was trading this, immediately you witness the main thing you should do would be to short the market, because market is actually bearish. And then it continued going bearish up onto this very point where the 50-day moving average, let me zoom this so that to be clearer, up onto this very moment when the 50-day moving average now went above the 200-day moving average. And what did we start seeing? We started seeing some markets started going up and all that, even though we saw some of these weeks and all that, these scam weeks and the rest of it, right? But just know that one of the things that golden cross helps you to do is that it helps you to determine what the current trend is. It serves as a trend filter for you, right? So that's one advantage of that's one of the ways, one of the good uses you can put the golden cross into, right? So the next thing it helps you to do is that it helps you to better time your entry. What do I mean by that? Okay, let's also go back to the chart we are looking at initially. For instance, at this point, okay, let's start from here. At this point where the crossover occurred, when this 50-day moving average went above the 200-day moving average, it occurred on it occurred on the 10th of May 2020. Okay, 10th of May 2020. Okay, that was when it occurred. right? That was when it occurred. But then the main thing would the ideal thing for you to do when this kind of thing happens is that you are trying along the market, you are going to go long in the market. But then the downside to it is that if you decide to long it here, right, if you decide to long it here, by the time you do that, you must have already been late. Like you're entering the market late, because look at where the market started going up. It was actually from here, right, that the market started going up. It was actually from here, yes. Immediately we got these scam weeks and all that, we got the rejection. This was where the market started going up. So what do you now do? The ideal thing for you to do will now be for you to go back to the lower time frame. And then I had already shared with us how to combine different time frames, how to combine lower time frame and a higher time frame for you to better time your entry and exit in the market. And if you don't know how to do that, I also encourage you to go back to the previous. I've done a video on that, how to combine the various time frames, right? So let's go back. We are using the daily as our higher time frame. So for us to get a lower time frame, we'll be using the 4-hour chart. Okay, this is 4-hour. Remember this, we saw this crossover on the 10th of May. Okay, so let's go back to the 4-hour chart, right, so that we know when to cross, how to take our entry, or how to get a better entry. This occurred on the 10th of May 2020. 10th of May 2020. So we are going back to 10th of May. This is 3rd of May, 3rd May, 8th May, right? 6th, around this May, right? So something around there, somewhere around this point. 10th of May. 10th of May should be somewhere around this point. Okay. May, 10th of May. This April, May. Okay, it's somewhere around there. Okay, the crossover occurred somewhere around there. All right, somewhere around this region here, somewhere around here, somewhere around there. Yeah, that's where it occurred. That's where the crossover occurred. So by using the lower time frame, it helps you to know when you should get an entry. It helps you to know when you should take an entry. Let me remove this, right? It helps you to know when to get an entry and all that. I'm trying to remove this. Okay, we just know that this crossover occurred somewhere around this point, around this region. Let me remove this. 10th of May, somewhere around here. 8th, 10th of May, yeah, somewhere around this region, around this zone. That's where the crossover occurred, somewhere around there, right? So I'm trying to remove this. Okay, so this is where the thing, this around here, this zone, right, just somewhere around here. This is just the region where the crossover occurred. So if you now switch to your lower time frame, remember we saw this crossover in 4-hour in daily. So you switch to your lower time frame of 4-hour, right? So it now help you to know, look at these weeks, just look at these weeks. You see, we saw this drop that was followed by a rapid rejection. Yeah, even the drop got to the 200 moving average. At a time, the 200-day moving average now started serving as a support on the 4-hour chart. So that being the case, knowing that this 200-day moving average has already started serving as a support, you could just decide to buy it. So this is the ideal place. This is just the ideal place for you to buy, right? So when immediately you see this crossover occurring, immediately you see this golden cross occur, switch to your lower time frame so that you can better time your entry and then get a better entry instead of staying in the higher time frame. Because by the time, if you decide to enter in a higher time frame, by the time you must have gotten it, you discover that market has actually gone further than you would have gotten in if you had switched to a lower time frame. So switching back to a lower time frame helps you to better time your entry. It helps you to get a better entry, just as what we saw here. We saw this drop, but this week represents what? Rejection. So immediately we saw it got this drop. This 200 moving average started serving as a support, and then it was rejected. This week means what? Rejection. And then we saw this this bullish candle form. There was still a drop, you see, that almost got to the same 200-day moving average. that it was equally rejected, and then we got this one too. So what it means is that whenever you see this kind of thing, the ideal thing for you to do would be for you to start looking for where to take an entry, and where is the best place for you to get an entry, something around there, because you've seen that this 200-day moving average has started serving as a support. So you should just start putting your entry somewhere around this zone, since the 200-day moving average is already serving as a support, right? So that's one of the things it helps you to do. Then let's still go back to our PowerPoint. Okay, we've shown how the 200-day moving average, the golden cross, can help us get a better entry whenever we see it in a chart, right? It helps you to better time your entry. And then the next thing it helps you to do is that it helps you to ride massive trends in the market, right? Golden cross helps you to know when to ride the massive trend in the market. We had already said this before. Look at it here. We said that whenever you see this golden cross occurring in the market, what it means is that a trend is about to change. What it means is that the trend is about to change, right? So look at it here. Immediately it look at this. Look at the golden cross that occurred there. At this point, look at this point. I'm trying to get a better one, right? At this point, the 50-day moving average went above the 200 moving average. So the best thing for you to do would be for you to buy. Remember how to get a better entry. We had already explained this before. So whenever you see the golden cross occurring, whenever you see the 50-day moving average going above the 200-day moving average, it's just for you to take a buy, right? Just take a buy. But remember the first point we noted, which is that don't trade the golden cross when the market is in a range. When the market is range bound, don't trade the golden cross, so that you don't get whipsawed, you don't get chopped out of the market. So whenever you see that market is either either going up or coming down, that is the ideal time for you to trade this golden cross, right? So at this point, we see this going above here. So the best thing for you to do would be to buy. And then if you follow this chart 3, you see that immediately it went above it, immediately it crossed this, immediately this golden cross occurred. Market hasn't ever gone down, right? It's been going up since that time. So what it does is that it helps you to ride this trend to your satisfaction. Now imagine buying BTC at this point. Imagine buying BTC when this cross occurred. That's when it was around that's around 7,000 or thereabout. Look at it, 8,000 or thereabout. Imagine buying this Bitcoin when it was just around that 7,000 something. Let's just call it 8,000. And then all this while you've been there and you've been kept riding it, and up onto this point where BTC almost crossed $64,000. That's a huge profit for you. And then another thing it helps you to do is that it also helps you to short the market. For instance, everybody is thinking that everything is over, but I do not believe everything is over, because I have my eyes on this. Two moving averages. That is the 50-day and then the 200-day. Once I see this 50 go above this 200-day moving average, I am shorting this market, and then I'm shorting it without conscience, because it just means that the bull run is over. The next thing we should start seeing is what the bear market. But right now, even if I'm shorting the market, I'm not staying it for long. Probably I will just be using lower time frame, maybe 1 hour 15 minutes and all that, just to short and buy. But if I want to take a longer entry on in this market, I would wait for this 50-day moving average to go above the 200-day moving average. Once it does that, I'm shorting the market, and once I short it, I forget it, because I know that this is definitely a full-blown bear market. But right now, we can't really say that the bull market is over, because the 200-day hasn't crossed above the 50-day moving average, right? So that's, I'm trying to backdate this chart so that we can see more examples of what I was trying to share with you, right? So look at it here, see the same thing that occurred here. Look at where it occurred at. You see at this point the 50-day moving average went below the 200, and then market kept on going down, kept on up onto this very point where the 50-day moving average now went above the 200 moving average. But there is something I want you to understand. Remember, I said something about making sure that the market you're trading is not in a range. Look at this thing. This is nearly a range bound market, I remember one of the things I said is that you shouldn't trade it when the market is more like in a range. Look at this thing. This is nearly a range bound market. So if you decide to trade this, you will definitely get chopped out, because here this was where the cross first occurred, and then didn't really take long, another cross now occurred. So this is why I said make sure that the market you're trading is not in a range, so that I don't get whipsawed out of it, right? So that's just it. So let's go back to the the PowerPoint, right? So that's just all for that, and I hope the video has been inciting, educative, and then you've learned anything from it. And if you found the video educating, I encourage you to give a thumbs up, like, share, and tell people about it. And then I will see you in the next episode. I remain your man, Mr. Solution.